Since I had a lot of time today, I thought about doing some backtesting using some COT report, valuation tool, and seasonality. I will do that on Swiss franc futures, and since it's only used for swing trading and I do swing trading anyway, so this video is for swing traders mostly. I think if you're a day trader, it will not help you as much because on the lower time frame the fundamentals don't work as much basically. And I will use replay mode on TradingView. I will choose any let's choose 2005 September, and let's see what happens after 10 trades. And I will aim for 1 to 2, and at 1 to 1 I will put my stop loss to break even. For this backtesting, I'm using long-term valuation, which works really good on daily time frame and short-term. So for long-term, I'm using 30-day valuation, and for short-term, I'm using 10-day valuation. Seasonality also works on the daily chart. I will be using 5 years if I see the data. Since it's in 2006, I think there's not much data to be seen, but we will check. This yellow line here represents fund managers. They move with the trend. They're trend followers, and they're speculators. So whenever a trend is about to turn, we can see some divergence here, and we can try to time the market based on that. And also the most important are the retailers. Whenever they are bullish, the price tends to go the other way, or if they're bearish, the price tends to go bullish. And I will show that to you on the chart in a minute. And this blue line here are the commercials. For currencies, they don't matter as much, but for agriculture markets, they are really, really powerful. Like this tool, if they're bullish, and that most of the time the price goes up. If they're bearish, most of the time the price goes down. Now, let me go to the price. Let me go to the chart and identify recent good quality supply zone and recent good quality demand zone. I will look at the COT report after I mark my zones. So there's first zone here. It is tested only, I think, less than 25%. If on the higher time frame a zone is tested less than 25%, we can still take the preferred version, which is right here. And where is the next supply? Next supply is somewhere around here. Or I can just say this rally base drop followed by another decisive candle. And now I would like to see the COT report. Valuation tool we will look at on the daily time frame, but let's look at the fund managers. If you look at the fund managers, look on the price here, they made a sort of a low. Look, low, high, low, high, higher high. And even though the price is going down, they are still bullish. And the retailers, I would like to see them at the most extreme, which is somewhere around here. And then we can have a short bias. So they're still around the mean. So we can still look for a long position. since it's such a good high quality zone, drop base rally, it's an explosive sort of decisive explosive candle, followed by another decisive candle, and then there's another move. So there was a significant move here, a good institutional activity. Now let's try to go to the daily time frame. And is seasonality working? Maybe not. I don't think so. But anyway, let's look at the valuation. So the long-term valuation is around the mean, and the short term is very close to this low point, which is the green area, which is undervaluation, which is good for us if we want to go long. And since we are biased long, I would like to time the market like this. It's a drop-based rally. There's one zone here, and then there's another zone here. So it's a level on top of level, and my rule book says if there's a level on top of level, take the distal level, because everything has pros and cons. If the price turns from the distal level, then you have more profit margin and good risk to reward. But let's say if you take the upper level, and stop loss is always 33% below the zone. If you take the upper level and it breaks, your first attempt was wrong, and then you have to again re-enter, because we are still biased long. You have to again re-enter because nothing has changed. The fundamentals are still the same. And on the daily, here's one supply zone here. I'm just marking it for now, and there is a gap here. So let me put on my limit order. Or also, you can also go like, there are many ways to time the market. Nothing is perfect in trading. So what you could do is you could say, oh, okay, well, I don't like to take 1 to 2. I'm a 1 to 1 guy. Then you can combine this zone. Then you will have more likelihood of getting filled, but your risk to reward will be lower. Only that. So this distal level right here, stop loss below. Is there something here? Wait, hold on. I'm thinking is that even fresh? No, it's not fresh. The distal level doesn't need to be fresh. What is it called? The preferred version. This needs to be fresh. Okay, let me put on the limit order for a buy. Now, let's see. Okay, so I'm filled. I will put my stop loss right here. My TP right here, confirm. And I think 1 to 1 will be somewhere around here. Stop loss to break even at 1 to 1, no matter what. So okay, stop loss to break even, and on the way up it created this gap right here, which it can come back to fill, but let's see. Yes, so it's a break-even trade. Gap is filled. Let's see what the fundamentals are doing now. Now, even if you look at it, the retailers are again to this low, and the price went up. So now, and also the commercials are really long, and the fund managers are turning their positions. We are, it's all stars aligned trade at this point, and even the long-term valuation is below the mean, close to the undervaluation. Now let's see what we can do here. It made this reversal doji candle. Stop loss, better to be safe than sorry. So what we can do, I will remove this zone here. So stop loss here below this pivot, and we will re-enter. And also there's a gap here too. Entry would be buy stop slightly above this candle and here, and we would, even though it is a really good high quality supply zone, 1 to 2. Let's first try 1 to 2 regardless of the zones, but later on we will see if the price turns, even though, you know, these high quality zones hold or not. It's a very high quality zone because this leg out candle is just super explosive, and it's followed by an downward movement. Let's see, since we, and also it can also break too, so let's just check it out, how it plays out. Why does it always fills me at market order? I can't move it. I always try for limit, but it always fills me at market. Replay mode sucks, man. But anyway, everything else is good, only this one part is annoying. And I'm only using one lot size because I cannot really have the same risk as CFD brokers, because it's futures and it's fixed risk with per contract, etc. So now we are close to the mean on the short term and long term. Let's see. Price is in drawdown right now. Close to the gap. Okay, stop loss filled. So one break-even trade, one losing trade. So we are only 1 hour in drawdown. Okay, so let's look at the COT report again. We are still bullish. So now we are still biased bullish. Now we have to find a different high quality demand zone for our long. This one is a fresh and good quality zone. There's also a gap here, so we can time the market like just where the gap starts, and also cover this area slightly for safety. It's a bigger zone, but for a 1 to 2, I think if the price is turning it, I think it will give us 1 to 2. Even if it doesn't at 1 to 1, we will be risk free anyway. 1 to 1. Here. 1 to 2. Limit order. Okay. And also we will be long-term, short-term undervalued at that point if the price comes all the way back here. It's just waiting game. Seasonality is working or not? Whoa, what just happened? Where did... Hello? Whoa, whoa, whoa. What the hell is this? How can I remove that? Oh. I think I did something here by mistake. No. Maybe I will hold on. Okay, now it's okay. Price is coming down. It created a gap here. Gap is filled. Let me check the COT report again. It's been some days. Okay, well, since I see a really good, really newly created demand zone here, and it is really candy to my eyes. This whole thing is demand zone. Since retailers are really short, I'm expecting the price to turn from here. Now there's one level here, like that. Wait, is there any trap zone here? I think I will do like this. Yeah, because I see there's a tiny gap here, and I would like to be covered by, I would like to have my stop loss below that. You never know when the price is gonna, where the price is gonna turn from. So there's one demand here, there was one demand here, which I would still not take, and I would still take this bottom one because it's the safest zone to play, but it's less likely to be filled. I will just still mark this one anyway. 1 2 2. And it is in downtrend in general on the daily time frame and even on the weekly too. 1 to 1. Buy limit. Okay. Okay, so we are filled. TP to 1 to 2. Confirm. Okay, so whoa. That is some good candle right there. Really bullish candle. Stop loss to break even. Okay, solid trade. So now I will remove these old zones here. Now let's go back to weekly zone. Oh, sorry, weekly time frame, not zone. The retailers are still very bullish. Bearish. And commercials are bullish. Fund managers are going up. Then I will still, my bias is still long. However, from where I can buy now, I would like to, this whole thing is a zone. Something like that. Maybe I will try to take the wider version. This is all discretionary at this point, like taking the wider version or taking the preferred version. Preferred version is this of any demand or supply zone from the highest body of the indecisive candle, which is over here actually. Here, this is in leg in, base, leg out, followed by another explosive leg out. That's a really high quality zone. And here is the preferred version. And it also covers this pivot, which is good. And let's set limit order. Or if we, you know what, I think I would like to improvise a little bit. I would like to play it a little bit safer. So it's a level. on top of level. I will play it like this. The gap below will also be covered, and like this is okay. You know, better to be safe than sorry. Like that. Okay, so buy limit. It's a really big zone in general, but it's okay. And it also broke this high, so now it's kind of like if you see the trend on the daily, it's kind of like low, high, higher, low, and it will make higher high and then higher low. It's kind of an anticipatory uptrend, and I kind of see a head and shoulders pattern here. Left shoulder, head, right shoulder. So let's see if it comes back or not. Valuation is overvalued long term and short term. It takes a lot of time for a price to, you know, come back to the zones, but it does eventually. So long-term valuation is around the mean, short-term is undervalued. Retailers are not at the very peak, so we can still try to go long. Okay, we are filled. TP 1 to 2. Still, price is still meandering around in the zone. We took some heat. We went close to, okay, break even, systematic. And okay, 1 to 2 achieved. Now I will remove the zones here. Now let's go back to weekly zone. Weekly time frame. Now let's see what are retailers doing. Retailers are getting close to the price. If we look at the previous behavior, the price went down when they were really bullish here, and obviously here. Massive move happened, and when they were at this peak, look at the move that it gave. So now The next fresh, currently the price is in this supply zone here. The origin is this one right here. This is the origin. So if we look for a short now, and also the commercials are kind of in the lower territory here, so which is good for us. Also, now let me tell you about this divergence thing on fund managers. Look at this pivot over here and look at their positions. Now the price is going even higher than this pivot. It broke the pivot, yet the fund managers have their positions even lower. So this is a bearish divergence right here, and these are actual positions they have in the futures market. Now let me go back to the daily time frame. Look at the zones. How many trades we took? 1, 2, 3, 4. 4. So 6 more, and then we will look at the stats. Weekly. Let me check monthly as well once. Monthly has above, okay. So here's a zone right here. That we can take like this. Stop loss above the zone, and this one I will remove so the chart looks more cleaner. And this, yes, okay. Are we overvalued? Yes, we are overvalued. We are good for a short. There's also a level here, level on top of level. This one is, you know what? Let's take this level, and it's also, never mind. This is also a flip level, but better to be safe than sorry, I would rather not be in the trade. Then I will put my stop loss right here. Entry is a little tighter, so I have a better risk to reward. And like this. Like that. Oh. Like that. And I would like to enter here. If I look at the 2-day, is there any good zone here? Maybe 2-day like that, and stop loss slightly above this area. Wait guys, I have to go pick up a delivery. I will be back. Hold on. Okay, I'm back. So what were we looking at again? Yes, retailers are bullish. Yes, we want to sell. Today. something like this, sort of a trap zone. First try. Let's first try here, since price is overvalued, long-term, short-term. If we are wrong, we will try to time the market there. Kind of aggressive approach, but fundamentals are really strong. I would like to. It will help me gather some more data, how the market is moving. Okay. Wait, let me put on a line here. Okay, filled. The way price is coming doesn't look really good, but let's see. Okay. Stop loss 1. Good. Now, if I look at this, let me look at from bird's eye view. Like this. Okay, we are filled again. One-to-one will be here. And if we look at the price, this doesn't look like a really good, it looks like, sideways movement, and I'm expecting it to break and go somewhere around this demand zone. Okay, so price reached 1-to-1. We'll put break even. Break even hit. However, eventually it hit the target. Okay, so now I would like to go see what the retailers are doing again. They're still very, very bullish. And our next area of interest would be I think we can try, since it gave a good reaction from this area, and there's a really good I will remove this so we can see better. There's a really good supply area here, and we would like to time it like this on the daily, and I see this pivot is broken, so I would expect another lower high. And our bias is still bearish, so we are in the good. Okay, price never came to our zone. That's okay. It happens. Let me check. They're getting close to bearish now. Let me try on this zone anyway, since they're around the mean and fund managers are going down. A lot of sideways movement. Okay, so now they're significantly bearish, and we would like to now we have to change our bias very flexibly. So this one never got filled, so I will remove that, and I will look for another high quality demand area. This demand area right here is covered by monthly, which is very, very strong. However, there's a wick over wick here, which means and it's right below this pivot, which means on a lower time frame there's a demand area here, and it's also very strong since it's a flip area. The flip area is where the demand exceeds the supply, and then it's transformed. Like there was a previous supply zone here, and then price maybe came into the zone and stopped for a bit and then broke out of it and created a new demand zone. That is a flip zone, and they are very strong. They tend to be very strong. Okay, so we can try to time the market like this. A nice trap area, because this looks more like not this. This looks more like a support area. Price has touched here once, twice, 3 times, 4 times, 5 times, 6, 7, 8. So it's kind of become a support zone at this point. And I see there's a gap here, which is very good for us. Gap, another gap here, which we can expect it to fill. And long-term valuation undervalued, short-term valuation undervalued. Commercials are kind of going bullish, retailers are bearish. However, there's no fund manager divergence yet. Right above this gap, buy position, buy limit. Let's see. Okay, we are filled, and move the stop loss and take profit. Okay, stop loss to break even. Okay, take profit hit. I will remove this zone here, this, and how many trades I did yet? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 3 more, and then we will look at the stats. This gap filled, this gap filled. Now let's go back to weekly time frame. The retailers are around the mean. We can probably still buy because next supply zone is here, and I see a really good demand area here. It's a level on top of level. So I will just combine it like that. This whole thing is an imbalance. Now let's go to the lower time frame. I mean daily time frame. And if we look at this area here, I can time the market like this. Wider version. Is there a gap here? Yes, there's a gap here. So I would like to time the market around where this gap is. Is there a gap below too? Oh no. But this gap is covered by hold on. I think then I would have to time the market something like this. Stop loss. Let me look at the weekly again. I'm kind of okay, so you know what, this looks like and there's so many gaps. I kind of have to think about it strategically, and let's just take this zone here. Better to be safe, huh? And this looks more like there will be stop losses here, and then price comes back and then goes up if it comes back. If it doesn't, then we will think and analyze again accordingly. And 1 to 1 here. This gap I will highlight again, and 1 to 2. Okay, buy. Okay, it's hitting this supply area. Broke it. Is there anything on weekly? No. I will remove this one. Wait. The retailers, hold on. Let me look at them again. Okay, the commercials are really bearish. We have to change our sentiment right here, guys. What are we doing here? Okay, so we want to sell. Fund manager divergence right here. It made the same high, yet there's high here and then another low. So you're expecting the price to go down. Now, how are we going to enter? There's one zone right here. Let me check 2-day. Another zone right here. I would take the second zone if it comes back. On a pullback, I would enter for a 1 to 2. I hope I'm not making this backtesting a little bit confusing for you guys, but I don't really make videos as much, so I hope it's explaining you a lot. Okay, the price never filled us. It hit the preferred version of the zone and then just went down from there. It's just now it depends on like it's all discretionary. You can take the first zone first, and then if it doesn't work out, you have to re-enter on the second one, or you can just double your risk and take the second one and have a safer entry, or just miss the move. I'm a very conservative trader, so I am okay with missing out on trades. It filled the first gap, it filled the second one. I don't understand what this sound is, man. It keeps coming. Okay, so I think we missed that move now. Now retailers are again very bearish, and next fresh zone would be somewhere around here, because this one is already in play, which we had marked before, and I was timing the market. I think we can still take this area, because that was our previous area anyway, right? Okay. I will remove this one. And there is one supply here, very strong. I would just cover this whole thing. Okay, 1 to 1, and I see there's a gap here. If you okay, 1 to 1. Oh. So I would time the market like this. I would like to cover this pivot and time it like this. One to one is still the same. Here, buy limit. Let's see if we get filled or not. Okay, we didn't get filled, but retailers are back to what is it called? I'm close to super bullish, and there's this. I mean, I would do like this, This gap is filled. We didn't get filled on the previous one. which is okay. Now we would like to sell. Also, again, we like it's discretionary, but I would still take the distal level to enter. Better to be safe. Where's 1-to-1? Here. Okay. Now the fund manager divergence is still there. Yeah, lower positions. By the time price will be in the second demand zone, our short-term valuation will also be overvalued. And okay, now the seasonality is working, and if you see, here's the seasonal tendency of the price going downwards. It's for 5-year average seasonality. So let's okay, we got filled TP 1-to-2, and also there's this massive gap, which is really good for us because I'm expecting it to get filled. Okay, so stop loss to break even. Okay, so break-even trade. Now, let me look at retailers. Again, they are very, very close to this bullish area where the price turns. I'm sorry guys, I have no idea what this sound is, and it's really annoying sound. And yeah, the next supply is right here. We will look for a short around this area. Let me look at the 2-day candles. Okay, let's give it a try here. It's a really good, really good zone. Lag out is really good, followed by another explosive candle, and the base has this green decisive candle. So drop, base, drop. Really good zone. 1-to-1. Let me count how many trades so far has happened. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So this is the last one if we get filled. Long-term valuation is also very it was overvalued. Okay, the retailers are back again. Okay, we never got filled, huh? I will remove this so far. the fund managers are going really down. They're really bearish. Okay, and what's the seasonality is like? Seasonality is really bullish. If you look at it here, the projection really bullish. Okay, and here it's tested once. Let me check if there's any demand zone here. There's not. So we would time the market like this again. Of course, if price comes down. It never came to our zones. Okay then, our previous zone for short. Now again the bias is short. Wait, yes. Yes. Seasonality. What does it say? Wait. Yes, there's some seasonal play here. I'm using 2-day candle chart time frame, I mean, for this trade. You can also use 3-day chart and find some really good zone and then try to time the market from there. Okay, we are undervalued on the short term, and there's this gap here. Okay, we are filled. If this zone doesn't work out, then I will re-enter here. Stop loss here, take profit here, confirm. Okay, well, it didn't even give us time to re-enter. Where's the next zone? There's no next zone. Okay, so, well then there's no short, I guess. 1, 2, 3, 4. Wait. 1, 2, 3, 4, 5, 6, 7. This one never. Only 7 trades so far. This is filled. Okay, so 3 more then. I guess I counted wrong. I also counted the ones that were unfilled. So let's what's the seasonality like? Okay, since the since we are biased bearish now, we can try an entry here. It's a drop-based drop supply zone. It's a good good supply zone, and we can try to time and cover that. There's a gap here and there's another gap here, but we cannot really, because the valuation is undervalued, which is against our rules. So we can try to time the market like this if the price comes. Okay, stop loss to break even, take profit here. No, sorry, stop loss to, oh, there's one problem though. It created this gap here, which I don't like, and also there's this big gap, which is good for us. Let's see which one it, oh no, okay, well, stop loss hit then. There's seasonality. Okay, so now since there's this gap below and we are biased bearish, I can try to time the market like this, because we never know where the price is going to turn. This and also remember, we are at all-time high and we are trying to time the top, which is not good. I mean, I think the data will tell me, you know, if it's a good thing to really do that, or, you know, against the trend or not. And our TP is right where the gap is, so if we get filled and we get some move to on the downside, we can expect it to get filled and hit our take profit. Okay, stop loss here, TP here. Oh, well, never mind, huh? Wait. Okay, it's not really a good thing then. How many trades it's been? 1, 2, 3, 4, 5, 6, 7, 8, 9. One more. Okay, this kind of looks better if we look at it like this. left shoulder, head, right shoulder, inverse head and shoulder, and we want to sell. And wait, 16 hours. Let me check another different chart. Like that. One to two. Sell. Entry filled. Take profit there. Stop loss to break even. That's taking a very long time, close to our break even. Okay, take profit hit. So that was our 10th trade, right? Let me count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trade. Okay, well, I guess I took by chance one more. So after 12 trades. So after 12 trades, I have 41% win rate, and well, I think that says okay. Well, I think 1 to 2 with 40% win rate is will make you money, and if it's even lower win rate, I think I was trying before, I think on a different asset 1 to 3, and that was working pretty good because then I had more chance to lose and still be profitable. Because it's not easy to time the market where the price is going to turn. It just comes from looking at the charts, doing back testing, and checking what works and what not. There are some trap zones here and there that you can look accordingly, and you know, like it's if the market shows you an opportunity and you are able to capitalize on that, then you will be profitable. Okay, well, that's it for today, I guess. I'm kind of tired now after all that back testing. I will do tomorrow, or maybe the day after tomorrow, or maybe after New Year, I think. And also Happy New Year and Merry Christmas, everyone. And may you all be profitable. And try to implement the COT report into your trading, and comment if it helps or not. Thank you very much.